Good evening, everybody. I'm Pierre Roberts, the Daily Trader. It is December 6th, and we are going to take a look at the VIX, Dow Jones, S&P 500, and also Nasdaq. Let's start with the VIX. So VIX is going up for the second day in a row. So we are up 1.39. That's 6.7%, closed at 2214. Let's look at what we have here. So we have the downward channel. So the VIX has been going down basically since October 12th. And when the VIX is coming down, the stock market is going up. And the opposite is also true. So the VIX came down for the past month and a half. And now it's really starting to come up. We don't have stochastic over 60 yet. So this move up might not be lasting. But we just need to keep this in check because this is already having an effect. If we take a look at the Dow Jones, two red candles also. So Dow Jones coming down to its important support here at 33,203. To me, that's the shorting support. If we go, we might be bouncing here a little bit, then we might be doing something like this. So this would be a head and shoulder pattern. This would be indicating a reversal. So this is why 33,203 is really important. And guess what? We just lost stochastic over 60 was lost. Stochastic is at 53. This is an indication that we have already lost the strength in Dow Jones. It's still possible that it bounces on support because supports and resistance are more important than stochastic. But once you have a break in support and break in resistance and the appropriate stochastic in the right direction, then things are usually going to continue that way. So we are not there yet, but we are just getting prepared mentally for that. S&P 500 lost stochastic over 60. We are outside of this upward channel. So we have been going up since October 13th. We have been going up and now the move up has finished. It's just one candle outside. So let's wait for two. But yeah. And we have a nice support right here that was used very often in the past. Support at 39.38. Let me write this down. This is important. 39.38. So if we break that, and I would even say, sorry. I will say just to be sure, let's go with this support right here. Because at 39.38, this is a real support. Look at how many times we touched it. But oftentimes when you have a congestion zone, because basically this is what we have. When we have a congestion zone, we have the first support that's used more often, but we have an outlier support, which I call a double support. We have an outlier support that is used a little bit more rarely, this one right here, but that corresponds to a resistance in the past. So this is a stronger support, and I would wait for that one instead of the first one that I mentioned. Let me give you that number also. So 39.0239. Yeah, I would wait for that one and let me make it bold like this so that we see it. So if we break that, then we might be coming down for a little while. And we are still part of this downward channel. So S&P has not been into a bullish trend really. Yes, it was in a recent small bullish trend, but the main trend, S&P 500, has been going down for 1 year. 1 year in a row. 1 year. Maybe we are going to turn around very soon. This is going to be something that we are going to need to watch. Then last but almost least, Nasdaq Composite. Nasdaq Composite, this one was not as nice as the other ones. It has broken outside of the bullish channel. So we have one candle outside, less stochastic. And for this one, I think the support is a little bit more tight. You can tell me, yeah, I see these wicks at the bottom. Okay, I'm going to negotiate with you. I'm going to negotiate 10941 if you want to be a little bit more sure. 10941, but then at that point, I think there is maybe a little bit of a short in there down to the previous levels at the 10350 approximately. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.